Hello, welcome back to Oikonomia. Today we are going to discuss the idea of TOBIN tax. I have already done a video on TOBIN's Q ratio, but this concept TOBIN's tax is something which is entirely different from the TOBIN's Q ratio. So I'll be explaining how this concept is different from TOBIN's Q ratio. Since I have already discussed the TOBIN's Q ratio, I'm not going to the TOBIN's Q ratio right now. Anyway, I'll be providing the link of TOBIN's Q ratio in the description box. Without wasting much more time by giving more and more introduction, let me take you to the exact idea of TOBIN's tax. Let's get started. You could see that the idea of TOBIN's tax is proposed by James Tobin, and it was in the year 1972 that this person had formulated the idea of Tobin tax. So he formulated or he proposed this particular concept in the form of a currency transaction tax. So it would act as a currency transaction tax. So what does it mean by currency transaction? It is actually a kind of process or method that involves transaction of currency. Now, coming to the idea of Tobin tax, it is something that is levied on the international flow of short-term capital, or we call it a short money. Why do you say it is international flow? Because today we are dealing with open economy, an economy which has connection with the rest of the world. So when we deal with open economy, there involves inflow and outflow of funds. And this could be both short term and long term. But in this scenario, we are not concerned about long term movement of capital or in long term international flow of capital. We are just concerned about the short term flow of capital. We call it as hot money. Why we are concerned about this? Why Tobin tax is just concerned about short term movement? Because as per Tobin, short term movement of money or short term flow of capital, this is something very much speculative. And we know that when it comes to speculation, there involves upward movement and downward movement with respect to valuation, with respect to prices, with respect to the kind of the value that a particular asset would be possessing. And speculation means it is not that stable. But here Tobin tax was trying to generate stability when it comes to currency market. And what does it mean by currency market? It is a market where currencies are bought and sold. Currencies are bought and sold. Like every other commodity market, in the case of currency market, the currency would act as a commodity and it would be bought and sold. And when it comes to the international flow of short-term capital, which is very much speculative. Now let's come to the more details of Tobin's tax. Before going to that, let's understand that India too has got a variant of Tobin tax, and this variant we call it as STT. And what does it mean by STT is that Securities Transaction Tax, and this is something that was introduced in the year 2004. This particular tax, STT or the Securities Trade Tax, is basically levied on every transaction of securities. And these securities would be listed in the stock exchanges. Having said so, let me take you again to the specifications of Tobin tax. Why do we need Tobin tax? I have already stated that we are dealing with short-term funds, isn't it? We are dealing with short-term capital flows. And these involves the movement of international investable money, and this would be speculative. And when we say that it is speculative, it involves so many problems which is related to instability. Why? Because it's completely unstable. It involves upward and downward movement very often. And here we are dealing with inflows and outflows of money. Money will be moving to our nation, and also money will move from our nation. There would be capital flows to our nation, and there would be capital flows from our nation. Of course, we are dealing with the short-term capital flows. And definitely this would create some problems. And among the different problems, management problems would be very much important. And this would be very much frequent for those emerging market economies, like emerging market central banks would be suffering from these sorts of management problems. And for the very same reason, the Reserve Bank of India too is not an exception, because as we know, RBI is known as the Central Bank of India or Central Bank of our country. So every nation would be having its own central banks. In the case of US, it would be the Federal Reserve that would be acting as a central bank. So every nation would be having its own central bank. And especially when it comes to the inflows and outflows of short-term capital, which involves so much of speculation, there would exist some management problems to the central bank of the country, which are involved in such a kind of movement of inflow and outflow of funds. So Tobin tax is something that would act as a prevention. It would prevent the movement of volatile short-term capital flows. We call it as sport money, which are very much speculative. So it just acts as a prevention with respect to the short-term capital flows, whether it is inflow or outflow. Let me discuss the benefits of Tobin tax. Why do you say that Tobin tax is good? This is so because of many reasons. First of all, we could see that it would discourage the short-term speculative capital. As I was telling you earlier, this would prevent the flow of capital. Flow of short-term capital, that is very much important to specify. And also it would be providing both the government as well as the central bank something called a gestation period. Why this gestation period is given? Because this gestation period would be providing both the government and the central banks some time. It will provide some time to adjust. So whenever it gives some time for both the government and central bank to adjust, it will definitely help to counter the destabilizing effect of the outflows as well as inflows that would be having there. And also we could see that the process of entry and exit of capital is definitely gets slowed down as a result of the time taken to pay the tax, which is another important benefit that is given by the Tobin tax. Having discussed the benefit of Tobin tax, we have to understand that Tobin tax is actually not free from limitations. It has got so many problems associated with the same. And what are the problems or limitations of Tobin tax? Let's have a look into this as well. There can be a fall into financial transaction. Why? Because we could see that it is trying to prevent the inflow and outflow of short-term funds, right? So whenever this reduction in financial transaction happens, this would also reduce the job opportunities. So there would be job loss, there would be unemployment as a result of something called Tobin tax. Again, definitely it would act as a cause for decrease in the liquidity of assets. What does it mean by liquidity? You will be able to convert the given assets into money soon. When we say that some asset is liquid, that means that that asset can be converted into money soon. But fall in liquidity means it's a kind of problem. Again, you can see that there can be some cost for investors, especially coming to the investment cost. This would be increasing. So what happens as a result here? This will be making the investors to reduce investment, which is again something that will make growth to come down. And what happens if growth comes down? This will lead to fall in welfare, isn't it? Welfare. Also, we could see that as a result of Tobin tax, there would be a reduction in return of various funds. So here we can have pension funds, such as different types of pension funds, and also we could see that here banks would simply pass the cost of taxes to the customers. So what happened? The burden of tax on customers would be increasing, and that too will be acting as a kind of disincentive, a kind of problem, a kind of difficulty. That's all regarding the idea of Tobin tax. Thank you for watching. I request you to like, share and subscribe to this channel for more videos. You can also be a part of the free Telegram community of Learn Oikonomia by clicking on to the link given in the description box. Also, you can download the Learn Oikonomia app. For the app also, you can use the link given in the description box. That's it. Thank you for watching.